Good morning, traders. Welcome to the TMT stock market strategy video for Thursday, February 2nd. All right, well, the FOMC rate decision is done and behind us, and they did not raise rates. As a matter of fact, they should, but that's not me to say. They also weren't talking so great in their language, actually. They may not even raise rates in March, and that's very scary, guys. Why? If we have a very good economy and everything's chugging along, why aren't they raising rates? So there's definitely something to keep an eye out for, that's for sure, along with many other things, right? Moving on, we have crude oil is getting very, very interesting. Now, crude oil is up in the pre-market as I'm recording this. But we have the main feature here is two things. There's two caveats here. One is the commitment to trade reports, which continue to show extreme shorts by the producers, which is the smart money in that report. Also, we have builds from the API number that came out on Tuesday, right? American Petroleum Institute, which is a private sector number, and also the Department of Energy came out yesterday confirming that we have a large build. This is going on 2 weeks now. What happened to the cut? What happened to everybody cutting their production? Well, that's not happening right now. However, crude oil is up on some comments and geopolitical movement last night. So we're up about 54 bucks. I'm going to go over crude oil with you. But to me, that's still, if we don't take out the high of 55 and a quarter, which I'll show you in the chart, it's just nothing but noise, and it's something that we need to pay attention to because we might have a real good shorting opportunity here in place. Two main charts I want to show you, and it's going to sum it all up: the skew and the VIX. Okay, and that's going to tell me that if now, you know, again, we are at TMT, we show day trading and stuff like that. But if those of you who are long-term investors and watching and managing your 401ks and your managed money, don't be fooled by the wealth managers, those money managers out there that some of them are great and fantastic. Some of them really just know nothing. They just bring in money. Protect your account, okay? There's something big that's going to happen. I don't know what it is. I don't know when, but I'm going to tell you the charts come out first before anything. Right in front of you is the VIX, the VIX. We hit a low of 950, guys. 950. Do you know when that low was something like that happened? Was in 2007. It was at 925. I believe 929. In 2007. This is a big warning sign. The VIX is telling you guys, for the longer term guys that are holding positions, tighten up your stops or buy protection because it's very, very cheap. This is a huge long-legged doji. Let me get this out again. Okay, at the bottom, at the lows, when you have the speculators in the commitment to trade reports, extremely short VIX. You need one incident. This VIX will be back not only to 29, it'll be back above 35 in an instant. Okay, remember guys, buy protection if you are long and you are managing a long-term account. Next is the skew. We showed this to you. I've showed this chart to you, and this is it calculates out of the money options, okay, on the S&P 500. And I just want to show you. Here's the S&P, and here's the skew, okay, overlaid with the VIX. Every time the skew gets at these extremes, what happens? We get a market pullback, okay. And here you could pause the video and just look at it. And I mark these in circles. All right, you'll see every time we get a skew, a high reading of the skew, the market pulls back. We're now not as elevated as we were before, but we are at 1134. We closed 1134. Just a couple of days ago, we're at 1258. Still extremely high. Okay, those are the two charts that if that does not tell you to buy protection in your long-term account, nothing will. Okay, this market just cannot go up. Case in point, Apple. Apple rallied to the 130 mark yesterday and sold off. Facebook came out yesterday up 5, sold off up only 1. After a while, when the shorts capitulate and then the buyers buy at the highs, there's no one left to buy. The market eventually will pause, roll over, pull back, and then start a correction. Right? Just be careful out there. The UUP dollar, interesting developments in the commodity sector. Dollar has now tumbled back down to the main support, and we talked about this up here when I said that more than likely we're going to fill the gap. Okay, If more at all than anything, gaps almost always get filled. It doesn't matter what time, when. It could be a year from now, but gaps eventually will get filled and then move higher. Now we are just about filled the gap. This is the critical juncture. Maybe even get to the 200-day moving average. But if we get to the 200 and we start to rally, this is going to be the sign where we want to watch gold and of course crude oil. Crude oil rallied on a weaker dollar as well, and that's what also fueled the rally yesterday. Aside from the inventory build, but this is, pay attention to this for you guys that are trading commodities. We're sitting right on major support, and then 200-day underneath it. So it's going to need to hold these two. Okay, if it does hold and we start to get a bounce and we get back above this uptrend line, and then we start making higher highs, and we clear this local swing high of 26, let's just call it, then I think we're back to the races, and you'll see crude oil start to really sell off, and you'll get that pullback in gold that we're looking for, which I'll show you in a moment. All right, here is the TLT. We got a nice little small little doji. Let me just open that up for you guys. All right, small little doji. Now, this is also do or die. We're gonna have this is gonna have to either take out this swing high here of 123.30 to get to at least a gap fill up in this area, or at least test the lows. If we get a double bottom test and we start to move higher, then this swing high, is going to have to be tested as well as this. All right, so right now, really there's no trade here. All right, I'd wait and be patient if you're looking to get into TLT. I do think, and I'll show you in the ZB and the bonds and the TLT, the USB 30-year bond weekly, we're sitting on a weekly 200-week moving average. If we lose that, it's pretty much over. Bonds will absolutely get crushed and rates will skyrocket. All right, so we want to keep an eye on that. Next is going to be crude oil, and I just wanted to show you that we're really stuck in a range here. You can see that we did rally yesterday, but believe me, I would use extreme caution with those inventory builds for the last couple of weeks. Something's not right. Okay, there is your trading range. This area here, that 55.24, needs to get taken out on a closing basis. Give it two closes above this range, then we're off to the races. You'll probably see 60. I think you see 50 before you see 60. But we'll see. Let's just keep an eye on things and see where we go from here. Okay. Remember, the dollar will be a big factor in crude oil and gold. Speaking of gold, same thing here. We get a little bit of a pullback. We pop back up again. Gold is up nicely today. And why? Gold is up because of the fear trade, right? It's a safe haven trade. And also the dollar, a weaker dollar, again, is going to help the commodity sector. Now, if we can get a strong dollar start to pop up, we'll get that bigger pullback, that deeper pullback that we're looking for, that higher low from here. That'll confirm this uptrend, and then we're back off to the races again. Same thing with the GDX. You can see here. I'm paying attention to this, guys. I'm watching this. You see that head and shoulders pattern. We identified this yesterday in many videos. All right, here's your right shoulder. Here's your head, right? And here's your left shoulder. All right, and there's your neckline right here, that slanted dotted line. All right, that dash line. So a break above it, two closes above it, we're off to the races. And remember, GDX usually goes first before the metal. All right, so just keep that in mind. Next, let's get right into the. Excuse me, guys. Let's get right into the spiders. Not much to really talk about, right? We have that island reversal. We're still hanging on to the 20. We got a little bit of movement, not much though. Really not much to talk about. It was kind of a ho-hum kind of a day yesterday of trading. But I want to show you the 60-minute. Here's that island reversal that we had. And we broke down from the island reversal. We have a double bottom, small little double bottom here. That number at 226.40 to 42, 226.40, call it, right? Or up in here of 227, call it 228. So you got under $2 here. We're in a trading range, but this uptrend line here from early November, all right, is now we're below it. So that's the range. Let's see if we break out. You can see here we're holding above the upper end of the range, but look what's happening to our momentum indicators, RSI, MACD. Really not doing too much of anything. Actually showing weakness. Momentum is waning here, so not a good sign as well. Transports, UPS actually missed a couple days ago. It's getting some heat here. This is the line in the sand here, guys, right here for the transports, 161.11. However, transports actually does very well from February to May, seasonality, if you look at the Traders Almanac. IWM, Russell 2000, did not break out of this bull flag. We broke back down into the flag. So if anything, we test the lower end of this flag, which coincides nicely with our TMT price channels. and look what's happening with the momentum indicators. Really not doing too much. So this is showing a lot of weakness. This is the weakest of the 5 indices that I just showed you. And we have a doji from our Qs. Thanks to Apple. Apple did help out a little bit yesterday. But guys, there's a lot of cracks out here. And again, I have no problem buying stocks during the course of the trading day. All I'm saying is that we're on a 5th leg and final extension in this bull market run, and I do believe at any given moment we're ready to start moving lower. Okay, and I would like to see one more big push up. That would just solidify what I'm talking about. It hasn't happened yet, so we could break down from here. Obviously, I mean, there's enough evidence to show that the markets are ready to break down. Enough. We just need now price to confirm what we're talking about and what we're seeing in the charts. Have a great day, everybody. See you later.